Have you been thinking about getting into Forex trading? Forex trading opens up a world of opportunity for those who know how to do it properly. You can experience financial freedom and reap tremendous rewards for your trading skills. Unfortunately, many programs make big promises and throw students into the trading market without the proper knowledge and expertise to succeed. Fortunately, there is a solution. Great White FX Academy is the best place to start your Forex trading journey with the tools, resources, and education necessary to help you thrive in the market. Great White FX is an online Forex training platform that provides technical training that will help you succeed. It is of the utmost importance to have a proper qualitative education to participate in Forex trading, and that is exactly what Great White FX focuses on. You can reach us on Facebook at Great White FX and Forex Educational Academy, on Instagram at Great White FX, on Twitter at Great White FX, or call us at 234-803-930-61888.
Hello, good afternoon. You're welcome to this week's market review for the 21st to 25th of September 2020 with Great White FX on the following pairs as you can see on your screen. So before we start, I'd like to remind us that trading the foreign exchange on margin carries a high level of risk and may not be suitable for all investors. Before deciding to trade foreign exchange, you should carefully consider your investment objectives, level of experience, and risk appetite. The possibility exists that you could sustain a loss of some or all of your initial investments, and therefore you should not invest money that you cannot afford to lose. You should be aware of all the risks associated with foreign exchange trading and seek advice from an independent financial advisor if you have any doubts. So that out of the way, let's get down to business. So as always, we're going to start our weekly outlook with the dollar index. As always, looking at, I don't have the news chart on my screen, but looking at next week, we don't have much major news until Tuesday, when we have New Zealand official rate statement. That's going to create a little bit of impact for the New Zealand coming into next week, and by weekend of next week, that's by the 26th, daylight saving shift is going to be starting. So what that means is that your market will move ahead by 1 hour. So your 4-hour candles will shift forward by 1 hour. So instead of 10, your first 4-hour candle starting at 10 p.m., it's going to start at 11 p.m. That's for those of you in the West African time. So let's get down to business. So we're going to start with the dollar index. Looking at the dollar index from the weekly view, we could still say it's on the downside, but price is in what seems to be like a consolidation. Let me go over to the monthly. Something I need to point out here. If you look at the monthly on the dollar index, this is August. This whole candle here is for August. And if you notice, price went below the low of August, but it didn't stay below it. And that caused it to close back inside the candle's range. Most often, if you notice, when price takes out the low and closes back inside, it always has a tendency most often to pull back inside the range. That's to continue in the opposite direction. So looking at the dollar index, if we drop down to our daily time frame, you can see that it's still in a consolidation. And if you carefully observe, this is that move I pointed out on the monthly. So as long as price stays above 91.74, there is a tendency that we might see a break above 94.00 on the dollar index to the upside. So how are you going to trade this? If you drop down to your 4-hour time frame, drop down to our 4-hour time frame, and I put in back my values. So if I put in back my values, this is my view on the dollar index. While the major trend is still to the downside, a possible bear trap may be in place at 91.99 to 91.75 area. Above 92.62 and rally may be seen. That's above 92. That's as long as price stays above this area here, there's a possibility that price is going to come up towards this area. So for now, we are in a range. The best bet on the dollar is to wait for price at the extremes. As this is the top extreme, this is the lower extreme. So you wait for price at these areas to execute your trades. So the next pair we're going to be looking at is gold. So looking at gold from the monthly, it's still slightly bullish. There has been no daily close below 1920.14. So this pair is still bullish. Major trend is still bullish on this pair. If we drop that now to our daily time frame, you could see that there's a massive consolidation on this daily time frame. I think there's something on the weekly as well. Yes, there's a range on the weekly. You notice this candle for the 10th of August. This weekly candle for the 10th of August. Price is just within the range of this candle. So if we drop down to our daily time frame, you could see it's in a massive range. You could see that it's in a massive range. So if you drop down to your 4-hour time frame, when you drop down to your 4-hour time frame, you put in our values. So what is my view on the dollar index? So the major bias is still bullish above 1902. The major bias is still bullish above 1902. That's 1902.72 to 1862.89. The current bias is in a consolidation. Price is in a weekly range between 2049.91 to 1862.89. So that's this area and this area. So the best bet on gold is to wait for price at the extremes. So this is the weekly area, this is a weekly high. You wait for price at either of these levels to execute your positions. But for now, price is in a consolidation. Price is in a consolidation, so we need to be aware of that. So that said, the next pair we're going to be looking at is the EURUSD. So looking at the EURUSD, as you can see from the weekly view, it's still bullish, but it's in a consolidation, as you can see. Price is in a consolidation, as you can see on the EURUSD. So if you drop down to your daily time frame, you can see it's still in a consolidation. This is the Friday's candles activity. It was, you won't believe this is a daily candle, but this is a daily candle. So if you drop down to your 4-hour time frame, the range becomes very, very clear. You can see it's a wide consolidation. So looking at this, if you put in your values, your best bet is to wait for price at the low area. As you look to sell from the highs and look to buy from the low area, you avoid taking trades from in between the range. So as long as price stays above, basically the first level that you'll be looking at is going to be this area here. That's previous week's low. That's coming at 1737. As long as price stays above it, there is a tendency that price may try for the high. So looking at this, given the proximity of price to the top area, what you should be watching out for is if this area doesn't hold price, two things: a false break above here and they move lower, or a break above and they move higher. So those are two things you need to be watching at this area of price. So with that said, EURUSD is in a consolidation. Your best bet is to wait for price at the extreme ranges. So the other pair we're going to be looking at is the British pound. Let's look at the British pound from the weekly so that we get, well, if you look at this British pound from the weekly, if you go to the monthly, this candle here, this candle for March, if you notice, it held price for 1, 2, 3, 4. Price was within its range for 4 good months. Price now broke above the high, but when it came back, it didn't close back above it. It was supposed to be a break and retest and a continuation to the upside, but you can see this candle is almost closing back within the range. So noting that, and if we go down to our weekly level, you could see that last week candle closed as a bearish engulf. So there is a possibility that price may correct a little bit higher before moving lower. So how do you trade that? You go down to your 4-hour time frame. Looking at price for our 4-hour time frame, you put in your values. So this area, if price comes down towards 1.2813 and gives you bullish evidence, then you might take a long position back up towards any of this area, because this area price, I said last week that it's an area where price may bounce from, but should price come down to this area and give you something like this, break, retest, then it's going to move lower. So that is it on this pair. This price is still basically in a correction. So the next pair we're going to be looking at is the EURGBP. So looking at the EURGBP, let's move over to the weekly. If we look at the EURGBP, there is the possibility this is still looking slightly bullish, even this break above this consolidation here. And this retest is a deep retest. So this week we'll be watching for price to stay. Price has above this high here. That's coming at 91.76. If 91.76 rejects price, then we might see a move lower on the Euro British pound. That's the EURGBP. So how are you going to trade that? You drop down to your 4-hour time frame. Drop down to your 4-hour time frame. You can see there's structure here, and that structure price has reacted off. So that means that you might be seeing a move higher on price. So you put in your values. When you put in your values, this is 92.68 and 0.9083. So those are the areas you need to be watching on price. Should price move above 0.9175, then price may head towards this high. So, but for now, price is in a consolidation. The major trend is still bullish, but price is in a consolidation for now. The fact that this area held here points to the fact that we might see a higher correction on the Euro British pound. So the next pair we're going to be looking at is the GBPCHF. So we're going to start from the weekly. If we look at this pair from the weekly, you can see that, like I said last week, where price was is not an area where you want to be taking a long position. So given this move, this inside candle, there is a possibility price may rally up before moving back down. So if you drop down to your 4-hour time frame, we could see where price is. We have this structure here, and that is what is holding price, as you can see. So if we put in our values, there's a fib. I'm using a fib from this previous week. That's this major week drop. That's why I'm using it as a range. So you could see that Friday last week price stayed below 1.1802. So as long as that level holds, this level holds this week, there is a possibility that we might see a lower move on the British pound CHF. So for now, this pair is in a downside, but it's in a bullish correction. How high will it go? We can't see. But should it stay below 1.1833, that's this last week's high, then there is a tendency we might see a move lower on the British pound CHF. The next pair we're going to be looking at is the AUDUSD. This pair is bullish, but it's losing momentum in a way. Notice this high here. That high comes in at 0.7388. You see price spiked it, but there has been no follow through, and after that we've been seeing a kind of consolidation, because given this size of this candle, it's supposed to have been a continuation to the upside given this momentum. So that's why I say there is a drop in momentum on this pair. So if you drop down to your daily time frame, you could see the daily time frame almost the same thing, wicks to the top side, small bodied candles. So if you're to trade this AUDUSD, how are you going to trade it? It's very simple. You put in your values. It's in a consolidation. So you note the high. As long as price stays below 73.45, there is a tendency you may see a move lower on price. But should price break 73.45, then you might see price head up towards 74.13. So for now, this pair is in a range. You just need to watch any of these values to hold for price to continue to moving up to the upside. So the next pair we're going to be looking at is the Euro AUD. So looking at the Euro AUD, this pair is basically in a downtrend, but for now it's in a sideways consolidation. So how are you going to trade it? You wait for price at the extreme levels. As long as price stays above 1.6124, there is a tendency it might still move higher. But should price rally into this area here, that's between 1.6335 to 1.6354, if price rallies into here and gets rejected, then you might see a continuation of the range move. So you just need to note the levels on your range and trade accordingly. Next pair we're going to be looking at is a New Zealand USD. This pair, there's something I want to point out on this pair. I have a fib level on this pair. It's not on that chart. I have my fibs on a different level, on a different template. So if you look at this NZDUSD, there's a high here, there's a high here, and there's a low here. And if you look at price, there's this monthly high for July 19th. Price spiked slightly above it and is still below the 62% at 67.64. As you can see, if you drop down to, let's go down to a daily time frame. If we go down to a daily time frame using this fib value, you can see where price, you see the way Friday's candle closed with a long upper wick. So knowing this, if we go back now to this chart, should price rally into this area and get rejected, then we might see a deeper correction. This fib is on the weekly range. That this fib is from 65.59 to 67.97. So if price stays above the 50%, the 50% comes in at 67.29, then there is a possibility it might move higher. So you just need to watch and see what price does. If price tries this high again and gets rejected, that gives you something like this. This is the first leg. This is now making the midpoint, that's the neckline. If it gives you something like this and closes back down, you wait for something like this. That's what you need to wait on this pair. Or if it gives you something like this, a minor rejection, then you also wait for something like this and they move down. So that's just the scenario you wait for on this pair. So the next pair we're going to be looking at is the USDJPY. Looking at the USDJPY, we seem to have a temporary low at this point, 104.27. The basic trend is still to the downside. So on this pair, given the proximity of price to this monthly low, that monthly low comes in at 104.18. There is a tendency that you may see something like this. You may see something like this. Price will dip low, then come back above here, then move higher. Or price may just run up to this area. 105, this area here, 105.10 to 105.22 is a level you should be watching. Should price rally and get rejected here, then you wait for something like this to take a move down in continuation with the prevailing trend. For now, this pair is in the downside. There is a possibility it might correct next week. The next one we're going to be looking at is the Euro Yen. Looking at the Euro Yen, let's look at it from the daily so that we have a daily view of it. So looking at this pair, you could see this range here. We can basically say that that range area comes in at 124.34, and as you can see, price has broken below it. This seems to be a retest, but we can't say clearly because this happened on Friday. So you drop down to your 4-hour time frame. When you drop down to your 4-hour time frame, if you are very conversant with the way I teach and the way I trade, you would notice that this is looking like a higher leg formation. This is looking like a higher leg formation. So although the trend is to the downside, you do not want to be taking a short position here. So how are you going to play this out? It's very simple. You need to wait for price to at least move a little bit higher, probably into this 124.58 area, because most likely 1, 2, 3 is already taking shape. So this is what you're looking at. So there is a possibility if you get a bullish close on the 4-hour within the week, that's on Monday, it might move higher. So you have two options. Either you wait for price at 105.58 or you wait for something like this to go lower. So that's the situation on the USDJPY. Next pair we're going on the Euro Yen. Next pair we're going to be looking at is the British Pound Yen. That's a pound yen. Looking at the daily on this pair also, you could see that there was a bit of a consolidation here. Then price broke. If you look to your left, there is structure here. So where price is not a point you would be comfortable taking a short position. So if you drop down to your 4-hour time frame, you put in your values. As long as 1.3457 holds, because price may come down to test it. If it holds as support, then you might see it move higher. So you'll be waiting for price to get rejected at 136.60 to continue with the downtrend. But should you see something like this, if price comes in here, moves above, then you're going to be looking at the move to the upside. But should price come into this area, give you something like this, then you wait for something like this, and you go short. That is it for the British Pound Yen in a downtrend but in a consolidation. You do not want to take a short position at this area. So the next one we're going to be looking at is the USDCAD. Looking at the USDCAD, let's go to the daily formation. Now let's go to the weekly. If we go to the weekly, you can see that if you look at this structure here, that's where price bounced up. And this is what you might call a morning star formation on the weekly. The low of this candle is still not taken out. So that means this bullish pattern is still valid. So knowing that, if you drop down to your 4-hour time frame, if you notice, price has been staying above 131.26. So if you ask me, this pair is still on the downtrend, but it has the potential to correct higher. So your safer trades on this pair is to buy into dips to the upside, except you see a reversal formation at 1.3259. If it gives you bearish evidence here, then you can take a short position to the downside. The last pair we'll be looking at is the USDCHF. Looking at the USDCHF, let's get down to the weekly. Well, trend is to the downside. We are in a consolidation. Let's look to the left. Well, price is above 90.66. It made a new low at 89.97. So because this low was like 2015 low, when price broke it, price was not supposed to have closed back inside it. So you can see that price is now back above it. So there's a tendency it might correct higher. Reluctancy to move lower points to the fact that once it gains momentum, it might move into opposite direction. So we drop down to the daily time frame, still down but in a consolidation. So how are you going to trade this? You put in your values, you drop down to your 4-hour time frame. So these are, as you can see, it's in a consolidation. So this is just what you need to do. If price gets rejected at 91.39, then you might see a move down to 90.49. But should price break this level here, then we might see 9200 on the USDCHF next week. So that just depends on how price plays out. So thank you all for taking your time to attend. If you would like to reach across to me, this is my social media handles. The links to this video will be posted on the YouTube channel. This is the YouTube channel, Plan Your Trade, Trade Your Plan. This is my Instagram handle. The link to the YouTube is in the Instagram handle on the bio. I also have a free Telegram channel. The link also is on the Instagram page on the bio. So these are my social media handles if you would like to reach across to me. And that is also to remind you guys that registration for the October, that's the final masterclass for this year, is currently ongoing. If you would like to take part in it and you would need more details, you could reach across to me on my WhatsApp line or on my Telegram handle or any of these other social media handles. So please, if you found the video helpful, subscribe and click the notification icon on the YouTube channel. So thank you all for taking your time to attend. I wish you all a beautiful night's sleep and a blessed trading week ahead. Thank you.